Let's now revise accounting standard 20 earnings per share. Why do we compute earnings per share? See, when we prepare statement of profit or loss, entire entity's profit is available, but that is not enough to make decision. To make decision, we need to do comparison. So we are going to learn computation of EPS, which will help us compare our last year's EPS with current year EPS for decision making, compare our EPS with our competitor's EPS or another company in the industry's EPS. All of it to help us in comparison, to help us in decision making ultimately. That is the objective of accounting standard 20 earnings per share. Under accounting standard 20, EPS are two types. One, basic, second one, diluted. Basic is mandatory for all the entities. Every entity will prepare EPS, will compute EPS and then write it in their P&L statement. However, diluted EPS, what we call as part 2 of EPS topic, is not mandatory for all of them. When we discussed applicability of accounting standards, you would have gone through them. Some standards are exempt, some standards are not applicable. Exempt means standard is applicable, some paragraphs in that standard is not applicable. So for small and medium sized entities, level 2, level 3, level 4 entities, there is exemption. No, that exemption is diluted EPS. Let me show. When you come to AS applicability for small and medium enterprises, there is relaxation with regard to AS 20, meaning 20 is applicable for small companies. In 20, some paragraphs are not applicable. One of the paragraph not applicable is diluted EPS. Same as per ICI, when we do level 1, level 2, level 3, level 4, for level 2, level 3 and level 4, exemptions is there. No, there if you see, there is 20. See here, not applicable. For level 2, 20 is not applicable. For level 3 and level 4, 20 is not applicable, meaning they don't have to compute earnings per share. Are you getting it? Why? Because this ICA's classification is non-corporate entities. No, there will be no share capital there. Interesting. For those who have not seen this AS applicability, you can watch this video where it is covered in detail. Now let's anyways move back to accounting standard 20 earnings per share. And even when we prepare consolidated financial statements according to accounting standard 21, we have to still compute our EPS for the entire consolidated entity as whole. There are certain definitions that you can go through. I'll cover the important ones because this is a revision video. If you say equity share is a share which is not a preference share. For this, we compute EPS. EPS is never computed for preference shares. Preference shares, the dividend rate is fixed, earnings is also fixed. For equity share, we compute earnings per share. What is preference share? Preference share is the share with preferential right in two situations. One, for dividend. Two, for repayment. When the company is giving dividend, first it should give it to preference shareholder, then equity shareholder. When the company is repaying the capital, first it has to be paid to preference shareholder, then to equity shareholder. Those are preference shareholders. For them, EPS is not computed. For them, dividend is fixed. Then potential equity share. We will consider this in our diluted EPS. These are not equity shares, but they have the potential to become equity shares. They have the right to be converted into equity shares, or we have an obligation to issue equity shares against them. Example, convertible preference share, convertible debenture, share warrant, option can be employee stock option or other than employee stock option also. Any contingency which has to be settled by issue of shares or any other partly paid up share against which dividend is not entitled to. Once it becomes fully paid up share, it will become entitled to dividend, then it will be equity share considered in EPS. Till then it is potential equity share. I'll repeat, if there is a share which is partly paid up, if it is entitled for partly paid up dividend, then it is equity share to be considered in basic EPS. However, if in the share certificate we mentioned that this share will be eligible for dividend only if it is fully paid up, till the time it is fully paid up, against that dividend is not entitled to, so it is not part of our basic EPS computation. It is a potential equity share to be considered only in diluted EPS computation. The day it becomes fully paid up, we'll consider it in basic EPS. However, if it is eligible for dividend for the partly paid up portion, then it is considered in basic EPS computation in the denominator. Next, there is definition of financial instrument, financial asset and financial liability. We don't have to deal with that right because 30, 31, 32 dealing with accounting standards on financial instruments are removed from syllabus, removed from accounting standards only. You will read financial instruments only in CA final, you will read that there, but the definition is still there in the chart, so that just like that, if you want to read, you can. Come on, let's go to basic EPS. Basic EPS is computed by dividing Patesh by Bains. Patesh is profit available to equity shareholders. In denominator, I will take weighted average number of equity shares. In the computation of Patesh, we should take gross profit, that is revenue from operations and other income, all the incomes added, all the expenses to be deducted, purchase of stock in trade, consumption of raw material, employee benefit expense, interest on debenture, all the depreciation, amortization, deduct all of this. We get profit before tax. From that you deduct tax, you will get profit after tax. From that you deduct your preference dividend. After you deduct preference dividend, what is remaining is the profit available to equity shareholders. We call it Patesh or ETESH, earnings available or profits available. This has to be divided by weighted average number of equity shares. Now we're discussing only numerator. You understood how to compute numerator? There are certain important points. Preference dividend will get added in case of loss. Profit is there. From that you deduct preference dividend. If the amount is loss, it is minus of 10,000. From minus of 10,000, if you pay dividend of minus 2,000, it will become minus 12,000 available to equity shareholders. In the case of cumulative preference shares, even in the year of loss, dividend will be declared and it will be paid in the later years. Let's say this year we have loss of 10,000 and preference dividend 2,000 is declared but not paid, will be paid next year. So this year minus 10,000, from that I will do minus 2,000 preference dividend. I will be having minus 12,000 to determine my EPS, and EPS will be negative. Can EPS be negative? Yeah, EPS can be negative. If the company has earnings, it will be positive. If the company has loss, it will be negative. Sir, if it has loss, can I say LPS? LPS Allah, EPS negative. Loss per share Allah, earnings per share is minus. Are you getting this? Sir, small, no, nothing. It is earnings per share negative. And even if there is arrears of preference dividend, that is in the case of cumulative preference shares, shares which have the right to be receiving dividend in the year of profit accumulated from the year of loss. If that is there, let's say in this year we made huge profit, in the last 3 years we have made loss, and this year we are paying our preference shareholders dividend for 3 years, including 2 previous years. In EPS computation, from profit after tax, we should only deduct 1 year dividend, not 3 years dividend. Why? Payment is 3 years dividend, but declaration is only 1 year. Those 2 years, previous year when there is loss, we would have deducted in the last year on declaration. It is paid in current year. We have done questions on this. So arrears of preference dividend paid for earlier years should be deducted only for 1 year. Cumulative dividend will not be deducted. Only current year dividend will be deducted in computation of current year EPS. Paid in current year, not declared in current year. Those accumulated and arrears of dividends. Got that? Next, any appropriation to reserves, whether statutory or not statutory, we don't care. First compute EPS, then you do whatever you want with that profit. Sir, if there is statutory reserve transfer, don't adjust it. EPS computation is before transfer to reserves. Why? Even if you transfer to reserve, that reserve will be available to equity shareholders only. No, we are not talking about dividend distributed. We are talking about earnings attributable. So such statutory reserve which is not eligible for dividend is also a reserve which is belonging to shareholders. So before deduction of transfer to reserves, we should compute EPS. I hope everyone understood this. By this we are done with numerator, which is earnings available to equity shareholders. Next we have weighted average number of equity shares. How to compute weighted average number of equity shares? If a share is fully paid up, we will take 100% of its value. 10,000 shares fully paid up. 10,000 shares into 100%. If they are opening balance, full year. If they are issued during the year, time from the date of issue till the year end, how many ever months are there, so many will take. If the share is partly paid up, then what do? We should first check that partly paid up share, is it eligible for dividend? If it is eligible for dividend, then it is to be considered in EPS computation. If it is not eligible for dividend, it will be considered in diluted EPS computation as a potential share to the percentage paid up for the months that is there in the company. However, if dividend is eligible on those shares, then what to do? Those partly paid up shares, take it into percentage paid up. Let's say 8 rupees is paid up out of 10 rupees nominal value. We'll take 8 by 10, 80%. If the shares are issued on 1st of April, so 100% of the period. So we'll do 10,000 shares into 80% paid up into 12 by 12 period. If it was issued on 1st of October, 10,000 shares into 80% into 6 by 12, because these shares got issued only in October, so it is there only for 6 months. That is with regard to partly paid up. If the shares have different nominal value, then we'll have 2 different EPS. If you have 2 classes of shares, you'll have 2 EPS. If you have 1 class of shares, you'll have 1 EPS. We should equate the number of shares. Imaginarily, we'll convert the number of shares and then compute EPS. Shares of 10,000 shares of 10 each fully paid up, 10,000 shares of 5 each fully paid up. What will you make it? You'll make it 15,000 shares of rupees 10 each or 30,000 shares of rupees 5 each. Compute the EPS for one class of shares and then identify it for two classes. So whenever there are two classes of shares in the balance sheet, EPS also will be two, one for each class, not the same for same class with different paid ups. I hope you understood this. Then what if there is bonus issue, share split or consolidation? Whenever there is bonus issue, share split or consolidation, irrespective of the date of bonus issue, irrespective of the date of share split, irrespective of the date of consolidation, we are going to compute period for those shares from the beginning. Bonus issue is made on 1st of October. 10,000 shares are made as bonus issue. 10,000 shares into 12 by 12, though the issue is happening on 1st of October. What if bonus shares were issued on 31st of March? Still 12 by 12. Full year we should take. Further, also remember one more point. This is done because we don't receive any consideration. That money what we issued as bonus shares is there in the balance sheet in the form of reserves and available to us for utilization throughout the year. So we'll take full year. Whenever you do bonus issue, that is issue of shares for non-cash consideration, we need to restate our previous year EPS also as if this bonus issue had happened not in the current year but in the previous year. We write current year profits divided by current year number of shares, find EPS. For this comparison, previous year EPS will be wrong for comparison now. Why? Previous year EPS is without bonus issue. So in previous year EPS computation, in the denominator, add the bonus shares and identify EPS. That new EPS that you found for last year is called restated EPS or adjusted EPS only for comparison. And in the P&L for the previous year, show two EPS, one original as per previous year's P&L, one restated for previous year exclusively for comparison purpose. Got that? Then we have right issue. In the case of right issue, it is shares issued to existing shareholders for a price lesser than the fair value. Lesser than the fair value is also called as theoretical X right price. After the right issue, what is the price in the market? In this question, check if they've given theoretical X right price in the question. If they've given, good. If not, you find. How will you find? Number of shares before right issue multiplied by price before right issue. Price before right issue is cumulative right price. Price before right issue multiplied by cumulative right price or price before right issue plus number of right shares multiplied by right issue price. This is our numerator. In the denominator, you take number of shares before right issue and number of right shares. That is total shares after right issue. I'll repeat. Number of shares before right issue multiplied by cumulative right price plus right shares multiplied by right issue price whole divided by shares before right issue and right shares. You get theoretical X right price, that is fair value. This is the rate at which the share should have been issued by company. But company is issuing shares at a price lesser than this fair value. Why? They are giving it to existing shareholders. So what should we do? We should take number of shares, that is right shares, multiplied by right issue price. If you multiply, you get some number. You divide it by fair value. When you divide it by fair value, number of shares you get, that is cash element. For these shares, company is collecting cash. Over and above this, any shares given is free, bonus shares. So right shares right shares minus this cash element will give you bonus element. This bonus element shares, you take it for the entire period from the beginning till the end of the year, irrespective of the date of right issue. However, this cash element shares, whatever are there, you take it from the date of right issue. And because this bonus element is free shares given, we need to restate our previous year EPS, taking this bonus element in the denominator for previous year EPS. That will be adjusted EPS or restated EPS. Got that? Then, if in case in the process of amalgamation the shares are issued, if it is in the nature of purchase, we should take it from the date of acquisition. If the amalgamation is in the nature of merger, it has to be computed from the beginning of the accounting period. No questions are there on this anyways. If there are any convertible preference shares or convertible debentures, from the date of conversion, they should be taken in the denominator, not before that. Because before that, they are potential shares that will be taken in diluted EPS. Till the date of conversion, potential. Once converted, basic. Got it? Then ESOP. If there are employee stock options outstanding against which shares are not issued, they are potential shares. There also we take cash element, bonus, cash element, non-cash element, and non-cash element will be taken in potential shares. Once it is issued, employee stock options are exercised and they become shares. Then it will be taken for basic EPS. Got it? Then let's discuss diluted earnings per share. Diluted earnings per share is an imaginary earnings that you compute. What if scenario where a potential equity share like convertible debenture, convertible preference share, or an option gets converted into equity share, and because of that our profits will decrease. So they are not shareholders. If they become shareholders, what will be EPS? They'll come and join our denominator. In the denominator, I will add potential equity shares. When I add potential equity shares in the denominator, in the numerator, they will add back the money that they had taken previously in their old capacity. If I am a preference shareholder, previously I would have taken preference share dividend. When I become equity shareholder and join denominator, my preference dividend, what I had taken from them previously, I will add it back to numerator. For this, no adjustment. Profit available to equity shareholders plus preference dividend divided by number of shares plus number of potential equity shares to be given to preference shareholders. If it is debentures, they give back the interest and they come sit in the denominator. Potential equity shares to be given to debentures will be added in denominator. Numerator, when we are adding back interest, which was previously written as expense, company had paid money. Now when the company is getting that interest money back, it is like income. You have to pay tax on it. So when you add interest, deduct tax 30% or whatever percent is given and then add it. So to the numerator you do profit available to equity shareholders, what is used in basic EPS, plus interest into 1 minus tax rate. In the denominator you write whatever you computed in basic EPS denominator, number of equity shares, plus potential equity shares which are to be given to debenture holders. That is to be done for convertible preference shares and convertible debentures. If it is stock options, what to do? Patesh will not change. Profit available to equity shareholders will not change. In the denominator, you need to compute it again. How do we compute it? Very simple. First, take number of options, multiply it with the option price that they have to pay. Multiply. You will get the total value. This total value, how many shares they should have given? We should divide it by fair value. They will give that in the question. Divide it by fair value. Whatever you get is cash element. From number of options you deduct this cash element, you will get non-cash element. Same like right issue. But remember, in right issue, you might have to compute fair value, which is theoretical X right price. In this, they will only give it in the question. Much simpler. And if you're doing questions from study material or somewhere, you might see something called adjusting factor. Don't worry, you don't have to apply that formula. You have learned the computation logically without using formula. Continue to do this and check your end answer. It will absolutely match in all the circumstances. Then next thing that you would have to notice, potential equity shares to be considered only if they are dilutive in nature. Any potential share, if we take, because of that, the EPS that we get now is more than the basic EPS, then don't take that. We should take only if it is dilutive in nature. When we say dilutive, it is not the profit, it is the profit per share, it is earnings per share that we'd have to check. And if there are any convertible shares, no, till the date of conversion we should consider, not after the date of conversion. If they are convertible debentures for 8 months, 4 months it's become equity share. In diluted EPS will take 8 months, not 12, because for the remaining 4 months it will come in basic EPS. We've done one question where 8 lakh was given 8% and 6 lakh. We've done one AQ. So that covers this part. Finally, in your statement of profit or loss, you need to disclose your basic EPS and diluted EPS if it is negative. It is mandatory, not an option. You can't skip this. And EPS will be shown for extraordinary profits and ordinary profits separately. And reconciliation has to be done between ETH and diluted earnings. From earnings available to equity shareholders, how did you arrive at diluted earnings? You added back preference dividend, you added back interest net of tax. That computation has to be shown in financial statements and in the workings. And reconciliation between weighted average number of shares, what is considered in basic EPS, and potential shares which are added to denominator in diluted EPS. How did you arrive at those numbers? That computation, what we do, that should also be shown in the preparation of EPS computation. And if the EPS is there, if the classes of shares is more than one in the balance sheet, then EPS will be more than one. Different EPS will be computed for different nominal value shares, and that also should be disclosed separately. You guys got this? And that's quick revision of accounting standard 20.